Hey guys, it's me, EOD here. In this video, we're going to be talking about the rental truths in Singapore. I want to share with you some tips that I wish I knew sooner when I personally bought my rental investment property as well. Some things that I only found out after having rented in the Singapore market for 2 years as well. Now, this video, we're going to be talking about it in fallacies in case some of your agents, maybe they don't tell you exactly the full story. For those of us who are blessed with good agents, then so be it. But let's talk about the first one. The first one is a lot of people actually only quote the profits, the returns based on mortgage, and they don't really care about any other costs, and it seems like none of it matters. So very, very common, you will get certain marketing gimmick quotes that says you buy a certain condominium for rental investment. If your rent is, let's say, X, which let's just say, for example, $3,000, mortgage is $3,000, then in a sense, your house pays for itself. Super profitable, right? You have an investment asset that just pays for itself. You don't even have to care about it at all. And you can get free money basically if you can rent it out. So of course, there are many, many problems with this. That's why it's called a fallacy here. But I want to share with you the true costs after having renting my condominium out for 2 years as well. I want to share with you some things that are important to factor in. That as a layman, when I first entered the whole space, I didn't really understand a lot of things. So I want to share with you transparently as well. The first one, of course, is MCST. For those of us who are living in a public housing HDB, there is this thing called a MCST that condominium owners have to pay, and it's quite a very substantial amount. HDB has also their own housing costs as well, but compared to this 250, or perhaps you are living with a family member, you may not be exposed to this kind of knowledge. MCST is basically the money that you pay for the managing agent of the condominium, the people who take care of the place, water the plants, are in charge of security, run the administration of helping you get new cards to enter the facility and whatever not. So that is the cost that is paid every month. Let's just say, I'm just putting a bit of hypothetical numbers. I'm using numbers that are close to reality as well, which is very similar to what I am observing on my property as well. So of course it's fictitious, but it's fictitious with a bit of grounding as well. I'm not just plucking numbers out of the sky. So one thing, of course, $250 MCST, which some people might argue is towards the low end as well, those of us who own maybe larger properties. I'm just using a very simple example of just like a 1 million condominium as well. Next up, of course, is property tax. This one is a bit of an underestimation. Sometimes it will be a lot higher. Property tax, let's say you pay another 200. This is deducted, and this is different from income tax. This is just tax from owning the property. These two are deducted if you pay, for example, property tax by gyro, or maybe you pay your MCST and you want to portion it out by months. Roughly, you'll be paying an additional $450 on top of everything out of the mortgage and whatever not as well. So, and we are not even talking about other stuff like income tax, etc., stamp duty and whatever not. Just taking these two into account, after these mandatory related fees, your agencies running the place, as well as property tax, which are mandatory, you are basically left with 2,550. So even though the rent, you look on the statistics on Property Guru and stuff like that, is a certain amount. You look at the mortgage based on what the bank calculates is a certain amount. You have to factor in these two, and it's very, very significant. It's almost $500, which is a very, very large amount. Almost 20% of your income is actually spent on these two related expenses as well. That's not all, of course. So I have a graphic over here. You can see in terms of your mortgage when you're paying your house, let's say the mortgage here is $3,000, just fictitious sake. You are, of course, not all of it is going to be paid to down pay your capital because you borrow a set amount of money, right? A lot of it also has to be refinancing the interest component, the cost of borrowing the funds. And especially if interest rates are a lot higher, maybe 3% and up, it's not uncommon to actually see the percentage of your interest repayments being significantly larger than your capital portion, the part that actually goes down to pay off the loan itself. So in this case over here, a bulk of it is just paying for borrowing the money. And on top of that, if you have your income here, which we split up, brought down to 2,550, this white portion over here, you actually need to top up out of your own pocket another $450 every single month in order for you to meet these expenses that you see on the left. So in dark here is the expenses, in the right here is your income from your rental after paying the property tax, MCST. You still need to top up money every single month just to pay off the mortgage. And on top of that, this portion over here, the part that goes to pay off the capital portion, this top edge over here, is also generally subjected to income tax. Of course, there's a lot of other release and stuff like that, but you can see the money that you make, this tiny portion over here, is really, really very small in terms of rental income, especially if you're buying like a small unit, a one-room condominium, studio apartment as well, which doesn't have too much capital appreciation. Where you sell the property, it goes for much higher. Your actual margins are very, very slim. And let's talk about the next part, of course, which is, did you use an agent? A lot of us, when we are buying the property for the first time, most of us, because of a lot of uncertainty, and chances are you have likely used an agent. So generally, from what I have seen, 1 year tenancy for rental is about half a month of fees based on the rent. So if you rent it out for $3,000, you pay $1,500. On top of that, you still have to pay GST on top of that $1,500. And 2 years is usually around 1 month fees, which is the full $3,000. So it's approximately around 4% of the gross rental income that you get. So I just did a simple calculation. $3,000 multiplied by the percentage is approximately $126 per month. Of course, it's not exactly apportioned so simply. You have to pay everything upfront to the agent, and then over time, you will get your full sum back. So this is a huge caveat that you also have to take note, because all the money is taken upfront. So you could have lost like interest on the remaining amount rather than if it was just split to a simple $126 per month. So on top of that, now the chart here will look something like this. Previously, you were already paying $450. Now on top of that, you're slapping in an additional $126, meaning that you are actually left with income before income tax and stuff like that of $2,424 from what it seemed to be a property that paid off itself. Now suddenly you have to top up an additional $500 plus per month, which is very, very different from what it seemed like at first, or maybe some of the fallacies people were painting for you. On top of that, now there are many other things that you also need to consider. The next one, of course, is the income tax portion is still not factored in. For very, very high income earners, perhaps you are in the 10% bracket already. Every single additional income that you get that goes off to pay your mortgage on the capital portion is also subjected to income tax after you minus off reliefs and stuff like that. But that's beyond the scope of this video. It's just for us to take into consideration. As it's variable, I don't really want to put a box there to describe, because some people, the red box might be very large. Some people, the red box might be much more tinier. Generally, the higher income you earn, the more income tax that you are subjected with, which is not even factored in yet. On top of that, what this chart, what this graph and all this explanation also assumes is there's zero lapse in rental period, which means, let's say your tenant is either renting for his entire life with you or moves in today, and then when he moves out, the next day a new tenant is in, so that there's no vacancy. Every single vacant day on an approximate of $3,000 a month is approximately $100 income per day. So if you miss a day, that's $100 gone. So vacancy is quite a big factor. If you pick a property that maybe has longer vacancy periods, that's very, very expensive as well. You're basically paying for an empty hotel, if you could say it that way. So it's quite expensive. And of course, it assumes that tenants are angels and items last forever. So a lot of costs are still not factored in. And as you can see, the returns are really, really so little. Basically, it's very, very small portion that goes off to pay the capital portion. So don't be too deceived based on what you see, the numbers. You have to take note of all these additional stuff. This list is, of course, not comprehensive. I just took the major ones. For example, the ones that are pretty big, very consistent, less variable. But there are a lot of other smaller things which are kind of variable, like stamp duty that you have to pay. You have to pay insurance costs also to insure the cost of your home. Some people maybe choose to take that, some people might not, beyond the scope of this video, but those are some costs as well that hasn't been factored in yet. Also, you have depreciation of items. Some people have really expensive stuff in there for the tenants that they wish to put in over there as well. I just basically included the largest ones, but you can see already many of the additional costs are still not factored in. So it's not that rosy a situation to be a landlord as well. There are stuff to consider too, and don't be deceived by any agent who tells you that is very, very rosy. So, which comes to the next fallacy that I want to talk about, which I wish I knew sooner as well. This is, it's easy passive income. You buy the property, you rent it out, you let ideally an agent handle everything, and you don't have to do everything. It's not really quite true. Sometimes, especially if you want to save money, you want to get more money, you do it yourself, you don't have an agent, you don't have someone to help you manage. You still need to do a lot of things. You still need to do a lot of decision making as well, thinking on your own part. Tenants are paying customers. They also have demands. So for example, if something is broken, something is spoiled, even if you have an agent helping you, you also have to make certain buying decisions when the property needs to be upgraded and stuff. If you don't have an agent, that's even worse because you do everything yourself now. You have to solve the issues, and it's usually almost instant because if the air conditioning is broken, lighting is broken, or a pipe bursts, you probably will have to help the tenant settle it, depending of course your arrangement, but it's usually very, very immediate, very urgent. If you're working a full-time job, it's not as passive as it is because you still have to get it done as soon as possible because tenants deserve to get a proper home as well. It's also required. So depending on your arrangement, really all these could be significant additional costs. It is not easy. And especially if you get nasty tenants, it can be quite of a massive headache as well, which is something very important to know. Last but not least, of course, in the third fallacy I want to talk about is tenants are very easy to find in Singapore. That's one of the things that a lot of people will say. There are 3 yeses that I put over here, but it's really a bit of a both. If you charge below fair value, if let's say your rent is 3,000, you charge at 2,500, yes, it's very easy to find in Singapore. If you try to charge a little bit higher above market rate, you have to really, really take quite a long time, which means that you're even extending the period for you to find a new tenant. So it's not easy either. It's also really good if the unit is in an excellent location, which means you probably also paid a slightly heftier premium, or maybe you got a really, really good deal, hopefully a really good deal, then you can get a tenant very easily. But if you're slightly further away from a MRT station, further away from a bus stop, not much amenities, it might be a little trickier to rent at a fair value rental price that you ideally like. So you might have to drop your price as well, depending on the condition. And of course, if economic conditions are good, jobs are everywhere, everyone's employed, a lot of foreigners are still in Singapore. In a recession, maybe a lot of people companies might retrench people, maybe a lot of foreigners went back to their country because they're quite expensive, perhaps, then rental market is going to dip very, very fast. And for example, if there's any cooling measures, also government feels that there's too expensive in rent, then all these might also be risks available as well, which are really, really not factored in the price. A lot of risk and some uncertainty. Of course, there are certain things like interest rates and stuff like that, and even more, which beyond the scope of this video, again, I'm just sharing with you the cost burden, that other people might not be sharing with you as well. And if you found this video helpful, this channel is all about talking about money. If you're interested to know how I actually saved up age 25, 100,000 portfolio and invested in stocks, check out this video. I also purchased this condominium very, very early on, 28, 29 years of age at $1 million. I will share with you guys more on the channel. Subscribe and see you guys in one of these 2 next videos.